All right, good morning, everybody. Looks like we got a few people still coming in. All right, welcome to the Hurley Investments Trade Findings and Adjustments of Thursday, August 13th. My name is Keith Bybee. Guys, it's good to be with you again. Today, I wanted to follow up a little bit with Kevin's, he called it a leap bull call calendar. So if you were here Tuesday when he went over it, that's the one I'm referring to, as in last Tuesday. And he mentioned to me yesterday that he had to place a similar trade as that one, but had to change the strike prices just to keep it at relatively the same price as it was going up. And then through the day, that was yesterday, it had dropped right from a 106-ish pivot point all the way down, and today is trying to hold on to that. So he wanted me to let you know that he had gotten some orders placed for a January, and he, as a side note, he did it with 2 long calls and for 1 short call for every 2 long calls. That's just the way he did it. That way he had some ability to hold on to some of those for longer term profit, and some would get called away at $120 strikes. So if you guys remember, the trade he had showed in Tuesday was a January 22 $50 strike. And a 115 short strike. Sorry, trying to type while I'm talking here. But it was around a $50, so he wanted to preserve that. At the moment, that's why he went up to another strike place to keep the same potential profit and same cost of around $50-ish or just under. So that is just an FYI. I'll just note one option is, but if you're thinking, oh, well, I guess we better do that one as opposed to the 50 and 115 strike. Let me just say that today is a different day. So this is a little bit what I want to talk about. Kevin issues a trade for one strike, ends up having to the next day look at the strikes above. And so my questions to you is, what happens when a trade is recommended by one of us, and the next day it's a little different? This is a bullish trade. It had started higher in the morning. You can kind of see this one. Started higher and had come down. But let's just say for teaching's sake, let's say that you were looking at it in the morning and it looked like it was going to continue higher, and it had opened several dollars higher than it did the previous day when the trade was recommended. What do you do? What is the first thing that you look at? Obviously, prices are a little different. And so the trade is a little different. Any thoughts, guys? So I'm going to throw one thing out there, which is obviously, first thing you would do is look at a chart. Having opened so much higher, it was hard to get filled at the prices at the lower strike. So Kevin made the decision, I need to get in for a certain price. I want the same credit, or at least close to the same credit on the short side. I want the same strike, I should say same distance between the strikes. So instead of a 50 and a 115, it was a 55 and 120. That preserves the same thought process. Nothing really has changed with JP Morgan. So if you look through your news, let's say it's making a movement one way or the other. If there's no news that you can see or find that's causing the movement, nothing's changed. So the thought process for the day before still holds true. It's just that the stock has moved. Now, should he maybe have waited a little longer to get in at the same 50, 115 strikes at maybe even a better cost basis? he could have. Maybe he can comment on why he chose the timing he did, but everything that he went over and everything that we see says long-term JP Morgan has great upside. So one way or another, it's still going to work. So I'd say if you're looking to do the same one and still haven't gotten in this trade, you still can look at, well, let's just look at prices here. Try to get my ducks in a row. So this is the 55,120 with the cost basis around 47.55. You can see here's the extra calls here. So a 2-to-1 ratio of long calls to short calls. That's another option, obviously. And this one is one that did get in for around $49. So you could actually be a little cheaper on this side. Even today, it's already down. It's even down a bit more. But we're also back into the range of the pricing that it was Tuesday night when Kevin had issued that trade. So I would say in today's current, I'm just going to say stick with the original trade. Because right now, just looking at the numbers, we're go over to analyze it again, and we're roughly the same, even a little bit cheaper. So that's what I would be looking to do. And just looking at a chart, let me update this just to see where things have gone in the last minute. But it does look like we're bouncing around between pivot points, right? So if this one was a resistance, we now have a support here down at the R1 pivot point, 101.69. So it looks like it is holding that. And so basically, I went over what Kevin might have done different or did do different. And now I'm telling you the first time is going to work better. So, but this is an interesting point because sometimes things do move around. So I would say if I'm going to kind of help you think through the at least the thought process on what you do, I think the first thing you look at is, after I type this, So now that I've kind of blabbered on about it a little bit, let me go back to that question. So things move around a little bit. What's the first thing that you need to do? What's the first thing you need to check? I gave a couple ideas, and I'm not necessarily fishing for anything. You don't necessarily have to tell me the same thing, but what would you do? What did you do? All right, Lance. Lance says first thing he would do is check the charts. I would just say as well, Lance. I mean, you could theoretically, you'd look at the chart the day we were looking at placing that trade, right? But yes, check the chart. I'm going to elaborate for you and say has a support or resistance been broken? Create another little sub list. Has there been a reversal or direction change? So if we looked at this one, you'd look at it and maybe think, well, it is looking like it's changing direction. And if you were going to wait today and look at it tomorrow, you would want to see it hold that pivot point, or the next day or days, see it bounce maybe off of the 50-day. But technically, it's not changing direction. I still see a bullish direction in this sort of channel. Hasn't broken a resistance, especially this pivot point. I might wait, if I were looking at it today, wait till the last hour, last even 30 minutes to see if that's being held. I'm just going to get a pen out here, highlighter, just to highlight this channel. Support here, kind of thick so it looks ridiculous, but 50-day support here just under that. There, 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 there. So in this case, not a direction change. It's not breaking a support or resistance. I'd say my next move would be to look at, and this doesn't necessarily have to be in, this isn't necessarily in any priority or order. I mean, all of this that we're going to list here is something that needs to be looked over before a decision or change in decision is made. So you know the stock has moved. Let's see what the option prices look like. So are they significantly different? Maybe I should add the word different in there. From the day the trade was recommended. I'd say if all else is the same, meaning stock still has the same upside, the story is the same, technically this is still on the same trend, but just a different price. So if all else is the same, can I go up or down in price? Let me clarify, strike prices. Can I stay close? Closer to the price when the trade was recommended. And I'm actually, I know I said it's not in necessarily any order, but it does make a little bit more sense to maybe look at that last, because if all else is the same is something you need to find out first. So this other, mentioned this earlier, material, or that's just maybe not great way to say that. I'll just say news on the stock. So is there a headline that's causing a change in direction? So sorry for the silence. I'm just scrolling through just to double check, see if there's any changes in news for JP Morgan today, and it doesn't look like it. But that's kind of the list. So if it's good news, obviously the stock is probably going up, and maybe you do need to look at a higher strike price if it's a bullish trade to be around the same cost basis that was talked about if a trade was offered the day before or a couple days before in this case. So those are some of my thoughts. Is there anything else you guys would look over or add to this? And I know a few people just joined slightly late, coming in here at the end. All we're talking about is a little change in some of the bull call calendar, leap bull call calendar that Kevin had talked about Tuesday for JP Morgan. He just decided to go up in a strike, keeping it around the same cost basis. Unfortunately, it kind of reversed yesterday, hitting the resistance level later on and coming down. Today, sitting right at a support pivot point. So feel free to stick with a 50 and 115 strike bull call calendar that he issued on Tuesday. If you need a reminder of that, just go to myhurleyinvestment.com and look for Tuesdays on the 11th. And he goes over that. So just looking at some ideas, if things change, check the chart. Any support and resistance has been broken. That might change whether or not you even put the trade on. Has there been a reversal, direction change? News on the stock, is there something that's changed the story that is causing it to fall a bit? That is just a situation depending on the kind of news, how bad it is, etc., etc. Whether you just are patient before you place the trade, maybe you can get in at a better price if it's something bullish and the stock has fallen a bit, or if it's something you feel is warrants much more patience, as it's maybe more negative and could affect the stock more. Maybe you just don't put it on at all and forget the trade. Talk to it, bring it up with Kevin again. Maybe he'll even bring it up, or I'll bring it up in the next trade findings or next Monday night commentary class. And then looking at option prices, has it changed so much that you're really not getting quite the same numbers, and maybe if it's gone up, your short call, you might be able to get a better credit, but it also will be more expensive on the long call side. So it's just a matter of working the numbers and saying, well, it's closer to the next strike up. Why don't we just go with that direction? So, guys, is there any other thoughts that you'd like to add to this? Abraham, good to see you. I'm glad that your name says Abraham, because I've made the mistake of thinking that you're not a regular Abraham, that you're some other guy Thanks for joining us. Well, I think this is important stuff to go over. The last thing we want, obviously, is for you guys to get swung around and not be able to have the tools you need to make your own best educated guess and your own decisions. Just want to enable you to yes, take some advice, and it's great to issue these trades and some of these ideas, but you know, we don't treat you guys like just a bunch of idiots. We want we want you to have a little trust in yourself and your own confidence in your decision making to decide whether or not any of these trades that we're offering are for you, and whether the timing's right. So that's something we kind of throw on you, but I did want to try and give you some things to think through and something to kind of fall back on if you need a little help in the future. And something like a JP Morgan trade has changed a little bit and you need to decide what you need to do. So I hope that was helpful. Guys, thanks for joining me this morning. That's all I've got for you. I did, let's see real quick. I believe Kevin had issued the Smith & Wesson after or pre-earnings. Can't remember if it was pre or after, but in any event, we had done a bullish stock, short-term stock buy in addition to any of you who have long-term holding in Smith & Wesson, around $18. So it was, it had made a run, and recently just got out at $25. Looks like it's holding up nice today, so that's good. But if that is one that you guys have been in, not a terrible time to take a good profit. You can also make the decision to take half off or something like that, but Smith & Wesson has been very nice. I would still expect gun sales and whatnot to continue to ramp up. It's just kind of crazy as far as that world is concerned. And I still believe that Smith & Wesson is going to have a lot to gain there from that. But they did announce they were rolling away the outdoor part of their company and the American Outdoor Brands portion, and they're going to list it separately on the public exchange. I can't remember off the top of my head what the ticker is, but in any event, it's the side of their business that hasn't made as much money anyway. But that's the reason for this big red line here from a couple days ago. But it looks like, at least today, it's kind of holding up well. People realize that Smith & Wesson portion of the company is more profitable anyway. So yeah, so I'll leave that to you to decide if you're in that one. Guys, thanks again for joining me. Not seeing any other questions or thoughts come in, so really appreciate it. Oh, we did get one. Thanks, Abraham. How are my leaps doing, Ida? Guess it depends on which one. Let's see. They're all doing pretty good though. Let's be honest. Everything just keeps going up. Facebook, I mentioned the 250, I think. Looks like I got logged out there, which means Kevin's probably trying to get in, so I'll leave that for him. But the Facebook 250 calls, I would have to go back and try and remember what the cost basis was that I had recommended. But whatever it is, it's looking fabulous. 250 cost basis, which was a little bit out of the money, I believe, at the time. I mentioned that trade, and up 12.79 above that strike. So that's looking great. Is there one you're specifically looking at, Ida, or wanting to know about? Apple leaps are another one. Ridiculously great. See how Apple is doing. No, they had come back down slightly. I mean, I say slightly, it's like $20, but heading up again. Target and Costco, yes. Target and Costco are looking amazing. I think I had mentioned around 127 was 125, 127 was the upside I felt Target had, but it had blown through that so quickly. I just kind of kept things and left them alone, and I'm glad I did. Obviously, it's just continued to go up. Target's done so well managing the circumstances, and I even like it better than Costco. Or did for a near-term trade. Costco continues to go up as well. I had, I think, 3 calls on Costco, and I took one off around here. Actually, it was probably around here. It was probably before earnings. I had made a good amount and was gonna follow through with my plan of buying more if it were to come back down. Obviously, it's come back up, but maybe my memories serve me wrong. I can't remember whether I sold one of the calls up here or around here. But either way, the 2 that I still have are looking great. Yeah, trying to see where they're going to find a resistance level. I like that it's holding on, at least trying to hold on for the last few days, this pivot point. And I think upside is, Jesus, up there at 350. So yeah, those are looking great. I can follow up again with those next time I'm on, Ida, but thanks for asking. Any other thoughts, questions, guys? Awesome. You're welcome, Ida. Thanks. All right, guys, have a great weekend. Good to be with you. As always, we will see you next time. Take care.